But anyways, we're gonna go ahead and get started. So there's not entirely too much to talk about today in terms of review. Was overall just a low probability FOMC day. The rates remained exactly the same, which I believe they're between 3.5 and 3.75%. Right, the rates laid flat, and typically whenever the rates do lay flat, it's just consolidative, lackluster price action. It's not the typical crazy 300, 500 point FOMC days that we're used to seeing. But I do think fundamentally, with everything going on geopolitically, that interest rates are in a bit of a downtrend. So potentially with the next FOMC that comes across, we could see lower rates. But looking at the chart here, we can see the S&P 500 overnight ended up hitting our target, right? So our weekly objective has been hit on the Nasdaq as well as the S&P 500. And whenever our weekly objective is hit on all of the assets and we see the day close more so consolidative, just like this, what do we need to wait for in order to gauge clarity? Restabilization, more information. Exactly. So the important thing to focus on is Wednesday's high and low. All right, we'll see if Thursday can create a cracking correlation on Wednesday's high and low. See if we can get a weekly cycle sequential SMT, or if both of the assets break through the low and then begin trading lower, we could see lower prices. If all the assets break higher and close higher, then we could see higher prices. You guys already know, right? We've been through this before about, I believe, 2 times so far this year. It's the exact same thing, week after week. We look for the same repeating phenomenons. Once a weekly objective gets hit and we see a day close more so in an iffy spot, just like this, then we look for that re-stabilization. So we'll see what the morning has to offer. Tomorrow morning we'll be tape reading, and we'll see if Asia session and overnight, if any more information can be brought to the table. So that's about all for index futures. But now rolling over into Forex. All right, here we have a 6-hour fair value gap created on Tuesday. And Wednesday opened up here. Right, we traded lower, traded inside of this 6-hour fair value gap, filled this 6-hour fair value gap, right? And now we're trading higher. But we can see price respecting this 6-hour fair value gap here that was created on Tuesday, respecting it on Wednesday, and observe where this 6-hour candle closed. We closed above the gap, right? So something that we could look for as of now, since the index futures is a little bit iffy, we can see if we can get higher prices on the euro and lower prices on the dollar. So just a simple gap that was formed on Tuesday being respected on Wednesday. We'll see if we'll have continuation higher off of this. And if our analysis plays out, we'll go deeper into why this worked. But now we can do a bit of Q&A and then go ahead and wrap it up here. Like I said, not really too much to talk about. Relatively lackluster day on index futures and just a simple little setup in regards to Forex. The S&P closed bullish today. This little settlement price right here, if you have that toggled on, it will have closed bullish, or toggled off. It will have closed bullish. If you have it toggled on, it's bearish. Yes, as of right now, index futures is just if then, working with the previous day's high and low. It's due to hitting our target and then closing the way it did. Yep, and then returning back. Now, let's say, price would have closed all the way up here and closed through this high. then we would look for continuation till proven otherwise. But since it did this very thing where it hit our target, fell right back within the range, and we had a very, very small candle body with large wicks, that calls for restabilization. Do you consider the Dow when looking for unsymmetrical and symmetrical highs or lows for the day or week, or Dow strictly for 930 lower time frame? You can look for unsymmetrical highs and lows in terms of a draw on liquidity for the Dow, as long as it is correlated and not decoupled. But the Dow is a lot higher probability whenever it comes to 930. Gaps don't hold the same strength if they are revisited more than once. Is this fractal? Yes. And that's the basic nature of gaps. And you take into consideration inversion pair value gaps. I mean, if it's there, but it's not something that I actively seek out and look for. If it's there as another confluence, then perfect. But inversion pair value gaps are the exact same, in my opinion, whenever it comes to probabilities as just regular candle close breaker structures. A 90-minute high probability sequential SMT will just be one with symmetrical low or high SMT. That's all fractal. Same with the microcycle sequential SMT. Yes. Everything is fractal. If a gap was fully filled or even traded below/above its range and later returns and respects it on the higher time frame, is it still valid? No. We'll take this for example. Let's see if we can find something. We'll take this gap, for instance, on the euro. See how price trades into this gap and then leaves it. As soon as it leaves it and really begins to run, we don't want to see price come all the way back down and start lingering inside of it again. All right, you want things to be quick. You want it to tag into the gap and then off. It's going. Take this gap, for instance, right? All the way down here. Price tagged into this gap, right? Filled it fully, respected it, drew lower, and what happened? Price came back to it. Did price respect this gap? No. Disrespected it. We'll see if we can find some more examples. Like, let's take this for instance. This gap here. Which this one isn't that good of an example, but price tags inside of this gap, right? Begins running off just a little bit, but it trades right back inside of the gap. As we can see, it failed. GBP barely touched the 6-hour gap, really sensitive. With the sequential gaps, how do we utilize the daily time frame? All that will come in the future. Did you always have such a discretionary approach to trading? The impression I get of your trading is that you just need a strong narrative, and then from there you have many different ways to get alongside with it. Yes. In the past, did you stick to just one way of getting onside? And would you recommend sticking to just one method of getting onside for those looking for consistency? Yes. You want to find something that resonates with you the best. And then once you have that, right, you don't need anything else. That's your, and these are words from ICT here, but I mean, he says it the best. That's your cookie cutter. Right, think about whenever you're making Christmas cookies and you have a star shaped cookie cutter. If you press that cookie cutter into the dough, you're not going to expect a circle. You're going to expect a star. So find whatever that is for you. And as soon as you get your baking sheet and your dough rolled out, which would be the narrative, then you find the cookie cutter, press it into the dough. And that's your entry technique. What provider do you use for the dollar? I believe the chart that I have here is TCV, but it's not really that big of a deal. Capital.com and both the dollar provide the same data. The only thing that's different is more so the opening prices. If all assets sweep the previous day's low, but we're still in this daily gap and something happens on the lower time frame, would it still be a value since we have a sign of strong continuation to the downside with symmetrical lows? Are you talking about on index futures for this gap right here? We'll see, but preferably for something like this, if there is an SMT here, right, or if the price has anything to do with this low, I'd prefer for the S&P to take out this low, tag inside of the gap, and for the Nasdaq to leave it unfilled, right, creating that SMT. Right. Now, not saying that that's 100% what's going to happen and that's what we're anticipating, but if it were to pan out in that sense, that's how I would like it to pan out. But it's all going to matter on the information we have coming into tomorrow morning. Of course, you're very welcome. When we're at all-time highs, what do you do for targets? For example, whenever the narrative is bullish, risk to reward. You can just target RR and then roll the stop to break even at a specific point. Which will probably answer this last one here and then wrap it up. The base foundation and approach we are building and seeing every day and week is very good. Our problem was narrative, and this really helps. Exactly. Narrative is the most important thing. Because once you have that, you can enter off of quite literally anything. And some people in here, they do that. As soon as they see a break of structure in the same direction, where they're expecting the higher time frame to draw towards, they're on it. Right? It doesn't have to be this overly, extremely complicated thing. It's just see what's present on the higher time frame, determine the draw, and then once you have that, it's easy from there because you have a filter. But with that being said, we're going to go ahead and wrap this one up here. So hopefully you all found this one insightful. I'll speak with you all again tomorrow morning. Good luck and enjoy the rest of your day.